TROW Price stock, ticker symbol TROW. On the 27th of October, TROW presented quarterly report where they beat on EPS and revenue. For the upcoming earnings, analysts think they will miss. And year to date, the stock is down 15%, which is very interesting. It never recovered from earlier dips. People love TROW stock because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yield sitting at 5.27% and 36 years of dividend growth. So could this be the perfect moment to buy TROW stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does TROW do? TROW Price provides asset management services for individual and institutional investors. It offers a broad range of US and international stocks, hybrids, bonds and money market funds. And if we dive in the most recent earnings, we see that assets under management was reported at 1.35 trillion and the average was at 1.39 trillion, up a small amount versus previous quarters. Effective fee rate is down a little bit versus previous quarters. Net revenue was reported at 1.67 billion and also up a little bit versus previous quarters. EPS was reported at $2.17, looking really good year over year. In here we see the assets under management one more time, now including historical numbers. It went down big time in 2022 because of the market that was going down. This is something which is really important. TROW performs well when the market overall does well. So when the market goes down, so does TROW. A thing that I really like is the fact that operating margin is increasing again. To me this looks really good. It's the same story with the EPS. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. TROW is a 20 billion market cap company. PE ratio is at almost 13, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for TROW stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 6.3 billion and in this graph we see that revenue went up in the long run. However, in the past couple of quarters revenue was going down. The good part is that most recently revenue is increasing again. This same event is also reflected in the margins. It is going up in the long run. It went down big time in 2022 and starts to recover right now. EPS is following the same pattern as the margins and the revenue. Nothing really special to add here. Analysts expect that in 2023 EPS will see a decline and in 2024 it's expected to report flat numbers. After 2024 things start to grow again. And for the revenue, analysts expected some decreases in the coming years, which is really interesting to be honest. Return on assets is sitting at 15.7%, which is a great number. Return on equity looks quite interesting, but the most important number, return on invested capital, is sitting at 10.8%, which is a great number. But it is lower versus the 5-year average, which is not a good thing here. But keep in mind that the market correction in 2022 had a big impact here. Current ratio is at 3.22, which is looking pretty good. There is nothing really special to mention here. Right now TROW has 400 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. TROW has roughly 2.6 billion in total cash, so they can't pay down all their debt with a blink of an eye. To me this looks really good and is one of the reasons why I love this company so much. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but it is not always steady and consistent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.27%, which is a great number. Annual payout is at $4.88 and payout ratio is at 63%. I prefer 50% or lower, so right now they have 37% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 13%, which is a great number, and they have 36 years of dividend increases. And if you take a look at these numbers, the dividends paid since 2012, you see that TROW did increase the dividends at a high rate. Keep in mind that in some years they paid a supplemental dividend because of good results. This is not a dividend cut. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that it used to be at a healthy level, but because of the market crash, payout ratio increased as a result. It is starting to come down already, and I expect in the coming quarters that payout ratio will return to healthy levels again. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TROW underperformed the S&P 500 big time, with only 15% return versus 76% return for the S&P 500. This result is including dividends. On the 1-year chart things look pretty bad for TROW again, with a minus 22% return versus 30% return for the S&P 500. On the 6-month chart it is not looking any better, with a minus 10% return for TROW, and the S&P 500 sitting at 7.5% return. On the 1-month chart it is again TROW showing negative numbers, this time a minus 11% versus 1% return for the S&P 500. Bottom line, the S&P 500 beats the TROW long term and short term. So with the stock hammered down, could this be the perfect time to buy TROW stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6% based on the historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 25, 27 and 29%. And for the free cash flow margin I'm putting in 16, 18 and 20. For the PE ratio and the price of free cash flow I'm putting in 14, 15 and 16. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now TROW stock is at $92. I hit analyze and we see only a few green numbers. We have a low price target of $49 to $77. We have a mid price target of $66 to $99 and we have a high price target of $87 to $127. To me, the mid to high price target is the most justified here, indicating that this stock is kinda in the middle of this range. My final thoughts on this stock is that it is one of my favorite dividend stocks out there. They have a long track record and they are still increasing the dividends at a high rate. The company is hammered down because of market corrections, and this gives us a great opportunity to buy shares at lower prices. Of course, not all fundamentals look great right now, but I expect the company to fully recover anytime soon. The fact that they can pay off older debt is something that I really like. Valuation is also looking interesting. I wouldn't mind to see lower prices so I can DCA my current positions. For now, I'm slowly adding more shares every now and then. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.